Good afternoon. Ira Epstein of Linn and Associates with your SPDR ETF video for this Monday, the 6th of July, 2020, about 4:50 p.m. Central Time. By the way, I am getting a haircut this week, I think, so it'll finally be back to somewhat normal. Still getting to a shop in Chicago, very difficult. Most are still closed. I was down by the Board of Trade today, just so you'll know, and that's where our offices are. And no, we don't have anybody in them right now. It is ghost town. I stopped by one of the local eating places at noon. I was the only person that went in. I just went in to say hello to everybody, took something to carry out. Said, how's business? They go, what business? That gives you an idea. So in parts of different places, this shutdown is still very much alive, and Chicago is a big city with that, although we were a big tourist destination for July 4th. Figure it out. All right, as you take a look at what's going on, a green day behind me. In fact, everything was green but TLT. Do you see that? Everything. When I got up this morning, 3:34 in the morning, I'm looking at a big stock market rally and looking for the reasons why, and I saw Shanghai was up, and then I read an article on Hong Kong stocks because they're going up as well, and people are still flooding into it even with all the unrest that's going on in Hong Kong. Very interesting. Obviously, the market sentiment areas, XLK, and of course, QQQ. These are the powerhouse areas of this market. It hasn't changed. You are pulling along other areas with it, no question about that. And the economic data we're getting, it should be good. In fact, next week, remember, we start the earnings season. So we're going to see more things. We'll get some more guidance, I hope. I think the market will just shrug it off like it's done everything else so far. When you take a look at the tech sector, a new all-time high. You can't get away from it. So this particular SPDR just rushing to the upside. The pattern is still one of a lower low, higher high. You can't get away, all-time high. So there's certainly an upside bias in the market. You've kept that by staying over the 18-day average other than one day right here about a week, and just over a week and a half ago. And other than that, you've really stayed over that number consistently. Very important. Now, as this market was correcting down to here last week, what did I say? I know that I was a broken record. I said, you have to assume until it doesn't work that what works keeps working, and that was the support at this number, and now you've got new all-time highs. Where's the resistance? Right here. This is where I look for the pros to be taking money off the table. We have a strong Monday, which often leads to a Tuesday reversal, not all the time, but often. Read the Stock Trader's Almanac, Yale Hirsch's book, you get an idea on that. I look for pullbacks. I look for them to be relatively well supported. You have an overbought market, but do I think the pros are buying Bollinger Bands? Let me spell this out in plain English. No. When we come over to the slow stochastic, overbought. All right, let's get over here to SMH. In SMH, for the first time, we're over an upper Bollinger Band. Traditionally, you get over an upper Bollinger Band, you only stay above it, the black dashed line, 5% of the time. Therefore, I look for this market to be on what I'm going to call borrowed time. I'm not bearish. I look for it to pull back in. I wouldn't be surprised that you get a pullback. But what's also going on in this is people that are late to the party, they're looking at XLK going, maybe I should just buy anything related with semiconductors, computers. And that's part of the story that's going on. So you're getting this run to the upside. You can see what's going on in the slow stochastic overbought. And yes, I think the pros are taking money off there. In the industrial sector, today's high was 70.34. That's certainly higher than the high we had here of 69.83, but it's been that way for a few days. You've been neutral in this market, and you're still neutral. You have a lower low, higher high, bias up and momentum up. Resistance, look for this Bollinger Band tomorrow. Probably won't be much, probably in the 69.30 to 50 zone, wouldn't surprise me. That should be the resistance, first resistance area. 200-day average, the other one. If you'll recall, on the way up to that number, I said that combination was lethal. First hitting it, I don't think I was wrong. I think the market backed off here, I don't know, 15% or something. Pretty good break in the market overall. And now we'll see what the market wants to do. In XLE, the energy sector, we've been getting this pattern of trying to climb up while the market is keeping an embedded reading. So as long as the market keeps the red line under 20 on a closing basis, I contend the pros are selling this rally, looking for prices to get back to 35.52. It was interesting today because, as you saw, one of the federal courts ruled against the Dakota pipeline, and I think it's energy it's called, and what it's done is by August 5th, they have to have it closed down. Now that's for the back-end fields, and what that's basically hurts is Hess and Continental and some of the other large producers. I don't know that there won't be a stay put in. It's complicated. I'm not an attorney. I did go to law school, by the way. I am not an attorney, though. And these things have ways where other groups come back and fight. Because it was already into an appeal, I don't know what the next move can be. This thing's been under review for a long time, and the Army Corps of Engineers won't be ready until next year to come out, they said, and give their final report. Well, that's not good. What are you going to do, close that down in the meantime? Right now, that's the answer. But you didn't get much of a bid, which was a surprise. It's going to take energy off the market or make it more expensive in some manner. As you look at QQQ, you can see that you just had that one correction in here, just like XLK. Found your support again against that 18-day average, and that's what I teach in charting. You do what worked in the past, you keep doing it until it stops working, then you look to see, is that a new norm for it? And if it's not, nothing works all the time, and that's what you accept. Market over the upper Bollinger Band? No, I think the market's going to pull back to the right-hand side, but no, I'm not bearish either. I realize it's overbought. No, sidelines. And over holiday periods, when you come back from a U.S. holiday that isn't recognized, be it in Asia, Europe, or other places, there are forces at work that we catch up with as we get the markets going back when they reopen. And that's part of what happened today. These markets jumped as we saw other markets moving and moving sharply. You know what I'm going to tell you in EFA? The combination of the 200-day average in gray, and the upper Bollinger Band, the first challenge of them, 63.03 to 04, today's high, 62.89. That's where I think the pros are going to come out. I will repeat, I think it's lethal. In other words, an awful lot of resistance. It's lethal to the bull, time to take money off the table, probably. If it keeps going, say la vie, it keeps going. I don't think it's going to. In GLD, we have an embedded reading. Now, an embedded reading occurs when the slow stochastic oscillator, which is momentum, sees both of its numbers go sideways for 3 days or more over an 80 reading. And you've had that, and you can see how this is running. When that occurs, I contend that on pullbacks in the market, in my morning subscriber video and in my afternoon ETF spider video, I show you the moving average that I use for that. And that's where I think the traders buy on the embedded reading, and I think they'll pop as you get to either a key window envelope, which on here I don't show them, or the upper Bollinger Band, the closest of. As we get to GDX power, and I said just before we broke for the holiday, if gold breaks out, as I think it will, how do you keep the gold miners down? Because their asset is what's under the ground. They don't have to mine. Somebody else will buy that asset. When they mine and make money and they have the asset, it gives them a good play. And that's what's going on. So I still think that until you lose the embedded reading now, pullbacks will be bought. TLT, if the economies are picking up and the economic data is getting better like we saw today in the U.S. with the market group data and so on, hard to want to be super bullish. On the other hand, you don't want to get too bearish because who are you fighting if you do that? You're fighting the Fed. You got to be very, very careful. The Fed is not going to let parts of the curve yield get out of whack here. They're going to control things. That's what I would expect. In FXE, you know I'm bullish in the euro. I've said it over and over, and I'm still looking, and you can see how this market's got now the higher lows, higher highs. Momentum is turned up, bias is up, 107.17 a target number, support as I see it, 106.26. You break the bullish pattern if you take out 105.75, but on this particular chart, nothing turns it bearish. I want to remind you, I keep talking about my afternoon spider strategies, the ETF strategies. I've already put them out. So you're watching me do this and they're already in my subscribers' hands. And what I try to do is go through the charts. There's 35 of them right now. There will be 40 shortly. And on those charts, what I try to do for them is give them trading ideas. I want you to buy here. I want you to sell there. Here's the idea. Here's where I'm dead wrong. Out you go. Here's where I want you to take money off the table. Why am I doing that? To give you confidence in your own trade. Now I'm going to give you a touch of the fundamentals, a lot of technical analysis with exact entry and exit points. I'm going to cover sector upon sector and ETF area upon ETF. This is what I do. So these are the markets that we're currently covering, and there's 35 of them in there, and we're just going to keep adding to these till I'm up to 40. That to me is the optimum number. How do you find out more? And if you want to get this, it's pretty simple. It's an $8.95 introductory price with no contract. You're committing to nothing. You want to quit it, you just quit it. We keep adding people. People seem to like it a lot because no pressure coming from, if you're watching my videos regularly, you probably like what I'm doing. Go to our website, under the word research, it's all explained. With that, I'm Ira Epstein. You have a great day and I'll see you tomorrow.